He wanted to raise his kids in the United States, and in order to do it, he needed a business plan. Little did he know his dream of building race cars would turn into a flex space empire. Today on Stories Behind the Door podcast, we have the CEO and founder of Hamza Invests, Hamza Ali. Well, he's the reason I even know what small bay flex is. He immigrated to the United States at 28 years old, started from scratch, and has built a reputation as the leading educator and teaching folks how to succeed in this asset class. I'm extremely excited to welcome to the Stories Behind the Door podcast, Hamza Ali, founder and CEO of Hamza Invests and the Flex Connect Network. Flex Space Network, let me rephrase that, and the Flex Connect event that's coming up here at the end of September. Hamza, first and foremost, thanks so much for taking some time to come and join the show, and just want to tell you some gratitude. You don't know this, but one of my old partners was at one of your events in 2024. The only reason I even know what Small Bay Flex is, which is a space that I've really grown to love. So appreciate you showing up and coming and doing the podcast, but also for spreading the word about this incredible asset class.
Yeah, absolutely. Thanks for having me, Thaddeus. Really excited to be here. It's been a journey. It's been a beautiful journey, and it carries on.
I look forward to digging into that journey for sure. Before we dive in, I'm going to give a quick shout out to my friends at Kiwi 2, Wayne Woolsey and his team, 30 plus years in putting up metal buildings, simply the best crews in steel. You can go to kiwisteel.com. If you're building anything ground up, they will get you as much help as you need. Put their 30 plus years of experience to work on your next project. Well, Hamza, I always start the podcast the same way. This podcast deals with storage and small bay flex. They're such niche asset classes. They're not places that people tend to set out to end up. How did Hamza Ali find himself having such an incredible presence in small bay industrial flex?
Yeah, so I mean, it's interesting. It wasn't meant to be this way. I came here now years ago, looking back, and sort of had a background in motorsports. So I moved from Dubai. Dubai is a huge motorsports hub. I just happened to be working in that industry at the time. And when I came here, I needed a way to immigrate. So, the government here has guidelines and laws, and they're like, hey, listen, we'd love to have you, but, you need to do something. You need to impact businesses positively, which is, I would say, which is the right way to do it. And so I decided, you know what, since I have a background in motorsports, let me go look for something motorsports related. And somehow through this journey, for 8 months, looking and trying to figure out how I was going to get it done, ended up deciding I wanted to build my own motorsports shop. So, 6,000 square feet initially, just to house my own business. And that was my business plan to the US government that, hey, look, this is what I want to do. I have a background in motorsports. I had pictures, videos, everything that I needed for my application. And they actually said, you know what, it's a good plan. So let's get you situated in the US and you can start your motorsports business. And I brought my wife and kids. The funny thing is that as I was going through the journey, we were building the building out, and at this point it was the thought, the shell. Got an offer, and offer was just like too good to refuse. It's like 5 years of motorsports work according to my business plan in 1 or 2. And I was like, you know what? This makes more sense. I'm just gonna sell the building and build another one, and then let's see where it goes. And that's sort of how I ended up in small, like, specifically.
You never know where the plan's going to lead, right? You make a plan, and sometimes it ends up going in a completely different direction. Talk to me about the journey. You build it, you get an opportunity to sell it. Obviously makes incredible sense when you can generate those type of returns. How did you end up making the decision to get into the education side of it?
Yeah, so 5 years ago, I needed a place to invest money. And unfortunately, the market was so new, so small, that we never actually found attractive looking product. So there's always, Flex has been here for probably since the 50s. Lower elevation, brick buildings. They're old, they're janky, they're nice maybe as an ROI, but they don't really stand out to where They are, like attractive asset classes to invest in. If I 10 years ago or 5 years ago told someone, yeah, I'm building warehouses, there was always a little bit of negativity around that. Or there was always, hey, why don't you invest in multifamily? Why don't you invest in offices? Why don't you invest in retail? Why are you investing in flex? The reality is the tenant profile is much larger for flex. Um, to the point where we are now absorbing people from the office businesses and from the retail spaces into flex, right? That's just the way it's going. And then the other thing is these people are generally busy, problem-free tenants, realistically, the problems that you face in flex are completely different than the problems you face in multifamily. And so when I actually came here after my first flex building, I decided, you know what, I'm going to start raising capital. I'm going to do all of this stuff. I'll become a syndicator. And everybody I would talk to invest in my flex space project would tell me, hey, if this was multifamily, we'd invest our money with you, literally. And so I actually pivoted for quite a lot of time into multifamily. So, I'm well aware as to what the issues are, what the pain points are with other asset classes, which is why I decided, you know what, more people need to know this. I would like to invest my own money in flex. I would like to help other people build their flex spaces. And in the beginning, it was more of like, let's see where this goes. Let's see how big this can become. And I think we've done a pretty good job turning over a lot of people from multifamily and other asset classes into flex. And we've also helped people diversify. So that, once you grow big enough, you need to diversify ultimately. And I think flex is an easy asset class for people to understand and just invest in.
It's interesting because I came out of the storage industry, which has had its issues in the last few years, similar to multifamily and office and even retail to a certain extent, although that's been a little bit more resilient in the short term than a couple of the other niches. We've seen this explosion of interest in flex from a lot of the storage folks that I know. Is it gonna be easy for them to just come into that asset class and start building? Are there challenges? Are there hurdles that folks are gonna overcome? Or do you see this to start being an asset class where there is more ground up development happening over the next few years?
I think there's enough information online today from us and from everybody else who's building in this specific asset class to keep the momentum going. People often ask me, like, are you worried? Like, you've been in it so long, you made so much money in flex, you built when it was $40 a square foot, and now things are like 100 and, whatever, 35 or 110, depending on where you are in the country. Ultimately, you have to look at two things, right? The first thing is the delta. So when I built at 40, I was selling at 60. When I built
Yeah.
at 60, I was selling at 80, once the project was done. When I built at 80, I was selling at 110, you know? And so we have these benchmarks of things that have traded in the past to where things are a little easier now to understand, even from a broker's side. So like, let's say someone coming in, I'm not going to say self-storage just yet because you guys are, or self-storage rather, is most correlated to flex. And I would say out of everybody who is going to have a easier time, it's probably the self-storage people who are transitioning or incorporating flex to their developments who are going to have the most ease, right? But let's just look at any other asset class. 5 years ago, you want comps. There's comps are very difficult to find. Now it's a different story. Now everybody is like, hey, we've been trading for this. And, people are very public as to what they've bought in for and what they've exited for many reasons. One of them is social media presence. The other is transparent investor reporting. Um, you know, and this is the direction that the world is going in, right? The customer wants more transparency. The investor or the developer wants extreme levels of transparency. And so all the funds and syndications are now publicly just giving you all the information you need. You know what I mean? And so looking at all of that, I think we are still in a good place in most of the country.
It opens up a line of questioning that I was excited to go down with you, which is, in storage, operationally, I've got 30 choices for third party management companies that I can come in. And depending on the scale of my build, if I have a 100,000 square foot self storage facility, I'm likely going to be able to get that third party management company to come in and operate for like a 5% cut of gross. I'll have to pay payroll and I'll have to pay marketing and all that, but it's not an overburdensome cost for me as if I'm a big Wall Street PE company and I don't want to build an operations company, I can go hire CubeSmart or Extra Space or Public, or I can keep naming, as I said, another 10, 15. That doesn't really exist in Flex in any way that I've found in terms of having like a large national, functional third party management. How challenging is the operational side of this business? And do you see that being something that, you know, fills that gap such that you're able to get those big PE money people come into the space the way we've seen in storage?
Yeah, so PE is a thing that I myself have seen actually, and I'll navigate what my thoughts are on PE, and how we are a little different than maybe self storage when it comes to that. So first things, right? First thing is property management. So property management for me personally, I could manage 1,000,000 square feet with one individual, remote, working. And this is actually how I do things, right? I work with someone. She's a pretty good, decent property manager. She lives in Tennessee. Me and her meet once a year, physically, like actually, like meet once a year. Other than that, she's remote. I see her behind the screen. She sees me behind the screen. We've sort of grown together, and she's, I would say, more than a property manager. She's more like a catch-all. You know what I mean? Like, hey, call this tenant, rent is behind, what's going on, just figure out what's going on, send out this lease, whatever it is. So when it comes to property management, I still believe that like it's relatively easy, as long as you screen your tenants correctly. Everything goes downhill once your tenants are become problematic, or maybe you loosen your guidelines a little bit. And I think such is the case in any asset class. This is not specific to Flex. It's not specific to storage. It's just, it depends on the individual. How much risk are you willing to take to get that occupancy number up? And then, based off of that, you sort of have to make the decisions. That is, I think, the extent of property management that is required. And I think if everybody had that one person, that one implementer, who does multiple things and alongside just manages this deal, that should suffice for the bulk of your flex space needs, right? These leases get renewed once a year. They're not really month to month. Tenants are generally paying on time. I think problems that you have to deal with is problems in the actual real estate. So like lift station breaks, landscaping pipe erupts, there's a crack somewhere in this or, like general real estate related things. And those are things you have to like sort of manage. Um, Now, when it comes to PE and where I think we're going is 5 years ago when I started, I was a big believer that private equity was going to come and just take this to the next level or take this wherever we need to go. But I actually don't think we're there yet. I think there's still room to run to where private equity is still not fully understanding the asset class. And here are a few things. This is, I think, only people who understand private equity can talk about private equity. Because when people say, oh, yeah, I got backed by private equity, that could mean three things, right? That could be that you got equity. That could mean you got debt, or that could mean you got a balance sheet. Those are the three things when it comes to private
Right.
equity that I think are extremely important. And you have operators that'll take the balance sheet, and you have operators that'll take the debt. And we've seen that. So I've seen private equity come with a balance sheet and say, hey, we'll give you the balance sheet. Go ahead, figure yourself out. And I've seen private equity come in as debt. Um, and they make a ton of money on that in fees and interest, and so that there's, I have not yet seen private equity to capacity to where they are willing to put down equity in advanced sponsors. Now, what does that mean? That means it's going to happen. Someone's going to get it done at some point. Somebody who has the right connection, who has the right vision, who believes in the asset class enough, and is crazy enough to take it to the next level, is definitely going to get it done. So we still have that one big element, that one big piece of this puzzle that needs to get resolved. At the same time, I am seeing hesitation with private equity, meaning right now, like I said, debt is easy, balance sheet is easy. The equity component, because I believe tenant profile is maybe not up to a certain level, and this could be, like I said, be a thing. It's not really um, all tenants that 2,000 square feet are, you know, of a certain profile. It is what it is. This is what we cater to. This is what America was built on, right? This is why I came to this country and I started my business hoping that I would grow from a smaller space to a larger space, right? Um, I feel like the appetite for that is just, we are shy one step. And I think once we hit that one step and it's done, then the amount of room that we have to run is going to be just phenomenal.
I share your opinion there. And again, having watched closely, Public Storage just bought NSA in the storage world. The number one bought the number three, backed by debt at 4.8 cap rate, right? So
Right.
that willingness of private equity to come in, that was a $10.5 billion private equity funded debt and equity piece. And I see that being a pathway. I'm kind of glad it hasn't happened yet, honestly. When you tell me that they're a little nervous yet, to your point, is there runway still there to go out and build stuff at 7.5, 8 cap rates and be able to see that compression down the road? Is that something that excites you? That you've already seen a little bit, even in the last 5 years, the cap rates that things are trading at, in the storage world, used to be able to 20 years ago buy a value add acquisition for double digit cap rate. Now you've got, small market stuff trading at 6 caps, which is lower than a traditional loan. Is that an exciting thing for you as you're watching the evolution of this asset class that you're so strongly attached with, to kind of see that pathway of cap rate compression just continuing to drive up the value?
I think there's no other place to do business than flex for certain businesses. If I'm molding carbon fiber and I need it for whatever it is, right? Space, machinery, automotive, whatever it is. Um, there's no real like industrial type development unless you're in China, obviously. But like, there's no. It's a very niche product that can only be built in a flex space. If you are building a very specific arm function for a robot that functions in some type of factory here in the US, that AutoCAD design to development can only happen in these smaller flex spaces, right? If you are in the aerospace business and you need to test out very small incubated projects, we are now seeing those happen in flex spaces. It's so interesting to see. And there's a lot of stuff I can't talk about that we see happen in these flex spaces. I think as far as runway, the only way you will understand runway is when you see the types of businesses that come in that literally did not exist 1 year ago. Uh,
Yeah.
and these businesses have nowhere else to go, like this is it. This is where they will be incubated and then taken to the next level. And at some point, maybe they'll grow out of your flex space and they'll go to 100,000 square footer, thing. But there is a means to that end. And fortunate for us, we are we are the only means,
Yeah.
these people can't go to office buildings. Most of their equipment cannot go up in an elevator.
Yeah.
They'll probably shake buildings beyond their capacity with some of the activities or businesses that they run in there. Um, and the good thing is the tenant profile is expanding. So my point with all of this is the runway is there. The private equity component will come at some point. Um, tenant profile is massively expanding to where now you have niche flex spaces. Like imagine flex space within itself is a niche. Now you have niche within the flex space, right? You have the car condo guys and the racetrack flex builders and you can live up, work down type setup in certain parts of the country. So it's come to a point where I probably tour at least a couple of flex space deals a week. And it's just interesting to see everybody has a different vision and everybody wants to take it into a certain direction and it's working.
Yeah. It's so fascinating. You just named 3 uses that I've never even heard of. I have a list of 50 uses that I've gone through for flex. It's so vast, the number of people. I used to run a martial arts school for more than a decade. That's and we would pay Class A retail, right, to be in a storefront. And you're talking 30. I mean, I was paying $9,000 a month for 3,000 square feet 15 years ago. right? Which is massive cost in rent. And nowadays, especially with Google search and the ability to go find things easily, I can be in a flex space with that product and still do very well. So your point is so well taken about just the variety of people that asset class caters to. One of the reasons I love it personally, I come from a long line of entrepreneurs, and that ability, like you said, and I saw the smile that you have that space. That's the only way someone can build their business out of their house and into a space that is functional for them to be able to grow. And God bless if they can get to the place where they need to go to 100,000 square foot space. What better thing could you do as a business owner than to own a business that allows somebody to see that growth in their business? It's pretty cool.
Yeah, and I've seen it time and time again. I've seen people come in, I've seen people leave for bigger, you know. Uh, Ultimately, the dream is, hey, you rent one bay, and then maybe one day you'll rent two and three. But some of these guys rent one bay, and then from one bay they're gone. You know, they're 100,000 square footer businesses, and
Yep.
it's just phenomenal to watch.
That's awesome. I want to ask you that question because small bay industrial, it can mean a lot of different things to a lot of different people. From Hamza Ali's perspective, where do you kind of see the sweet spot? 1,000 to 2,000 square foot, 2,000 to 5,000. Is there a sweet spot, or is there room across the gamut, even going maybe above 5,000 square feet, where people can be successful?
I think the higher you go in square footage, the lower the per square foot dollar amount you can command. And that's just normal with all real estate, right? Now, there is an ideal depth, width, height, and square footage number that we always talk about within the FlexSpace network. And I'll share that with you. And this is based off of data that we've collected from over 600 developers time and time again. The person who started this is actually me. So like I came up with a number that I thought was the best number to build in and the best parameter to be in as far as single and double. So your ideal tenant is either taking one bay or two, right? What I can tell you is that 2,000 is actually kind of high per bay. You ideally want to be at 1650 to 1750 per bay. And that is where you will get the maximum dollar per square foot for your bays per bay. At 1,500 square feet, there is a little bit of a problem. At 1,000 square feet, there's a little bit of an issue because you may make more money, but the tenant profile changes significantly. So you may have a person who is coming, like for example, for 1,000 square feet, the most realistic example is 80% of the tenant profile that you will get wants shorter term leases. They want like, hey, could you rent 3 months or 6 months, you know? And for them, a 1 year lease is considered like a long term commitment.
Yeah.
You know what I mean?
Yeah.
Now, yes, you will make more money, but is that something you want to deal with at the same time, right? So that is a challenge that I think is there for the 1,000 square footer units. And this is obviously, I'm talking about based on the data that we have. Um, then you have the 1,500 square footers. The 1,500 square footers are very sensitive on price. It's like overly sensitive on price. So they know they're not in the 1,000 square footers. They know now this is a long-term lease and a long-term play for them, but they're very price sensitive. And the 2,000 square footers are then also price sensitive. So you have this range that you play in. Tax is like, it just makes sense, you know, and I $2,000 a month or $2,200 a month, but you have to be in that 1,650 to 1,750 per bay range. Also, when you double it up and you're closer to just 3,200 square feet, once again, for your larger buildings, you're not at 5,000, so you don't have that sensitivity there. You're just below that. So on the larger side, you can once again then command a little more per square foot than you would be able to if it was any larger than 3,200 square feet.
This is a perfect lead into the Flex Connect event you have coming up at the end of September down in Houston. I'm very excited. Barry Sherman, our principal at S3 Partners, and myself are going to come down and join us. Talk a little bit about what this Flex Connect event is. What can people expect? Why is it that somebody involved in the flex space asset class niche should get involved and come down and join you?
So this is our 4th year hosting Flex Connect. We're really excited. It's been growing year over year. The community that we've built is just, you know, it's everybody and anybody in Flex is going to be in that room, right? The primary function of this event is we did not have this type of event when I first started. And I was like, what better way to find all the crazies just like me who are going to come in and do something crazy with this asset class? So let's host an event. It's going to be a couple of hundred people, maybe a couple thousand people at some point, and let's all get together and see what we can do. I would say the event is geared towards two types of people. The first person is the person who is convinced but has not taken action and is sort of sitting on the sidelines. That could be because they don't have enough information, or it could be because they don't have enough of the education part. It could also be because they just haven't seen other people succeed in front. Like, different when you actually look at the stage and look at the success in front of you, and you're like, you know what, I could do that. And so that is one person, obviously, that we cater to. And then, believe it or not, we cater to a lot of people who are actually interested in investing in flex spaces. They've had their successes. They've had their grand exits. They're looking
Yeah.
to invest with other people who are more, who have the drive, who have the hunger, who have the passion. And so those are really the two avatars that we look at, that are coming in to flex space here, that we actually have sponsors for events. It's going to be amazing now. And all of that, now there's solidify uh, and become a valuable resource now to anybody attending the event, who is able to then make a decision faster than they would. And ultimately our goal is, I tell people this jokingly, but ultimately our goal is to hit $300 a square foot here in Texas as a sale price. And I can only create so much hype on my own. I need everybody now to get involved and sort of take this to the next step. And that's sort of where we want to be.
I love where your mindset is. There's been some people on this podcast before. Ken Woolley, who's the founder of Extra Space, Mike Burnham, who's the CEO of Storage Mart, one of the big privately held companies in storage. Those guys started in storage in the 1970s. And one of the things they talk about, actually, Maurice Pagoda is going to be on my other podcast tomorrow. He started in the 80s, National Storage up in Detroit. I bring those guys up because they had to educate banks. They had to educate consumers. I mean, they had to teach people the value of what self-storage was. And fast forward, 40 years in Maurice Pagoda's case, and Ken Woolley and Mike Burnham, 50 years they've been in the asset class. And that education has paid some significant dividends. So really kudos to you. And as I said at the very beginning, and I'll say again, as we're coming close to wrapping up a half hour, I'm so grateful that you have chosen to share the information you have, because quite frankly, I wouldn't know about this asset class and wouldn't be involved in the things we're involved in this asset class, which is how I'm making my livelihood. So really appreciate that you didn't have the closed-mindedness to protect and not share what it is you've been sharing for the last half a decade. Very, very much appreciated. I want to pivot back as we wrap up. This is really kind of a heart-centered podcast. You mentioned something early on, and I was going to go down the road then, but I'm saving it for the end. The ability to bring your wife and your kids to the United States. I think in the United States, sometimes we have we see Dubai now and we get exposed to the beautiful parts of it, right? We see it on like Real Housewives of Dubai, and we see towers. And talk to me about the ability of Hamza Ali to come to the United States, to bring your family with you. What's that meant for you, and what's that journey been like?
It's been life changing. I'll tell you that it's not all. There's a lot of glitz and glam, but it's not all. And it's like every other city. You have the upper, and then you have the middle, and then you have the lower. Everybody needs to get to work at some point. 12 years ago, I made the decision where I wanted to raise my kids here rather than there. And I get questioned about it a lot, but I'll tell you what, I'm very happy with the decision I made. I get to see my kids just grow every day. It's a beautiful experience. And I don't think my business would have grown to this level had I stayed there. There's a lot of things we can talk about. City is just phenomenal. It's one of the probably fastest growing cities in the world. But there is no debt structure for people to just go out and do what they want to do. And I think that's a very important element that a lot of people forget. If you're rich, I would highly recommend you go there for sure. But if you're not, then I would say, and if you need debt of any kind to run a business or to build your real estate empire or whatever it is, um, probably best to do business here in the US.
Hamza Ali, what an incredible half hour. His email's down at the bottom. A Flex Connect coming up at the end of September. Get your tickets. An unbelievable thing that he's doing, helping people really understand this asset class. I kind of knew this about you, but a genuinely good human being. It's been really cool to spend a half hour and kind of get the story behind how you've gotten to where you've gotten. I'm very much looking forward to meeting you in person at the end of the September. As I said, we'll forever be grateful for the role you played in where I'm at in my career. Because without you, without my old partner, Russell Nursasov, coming down and visiting one of your events back in 2024, I wouldn't even know what Flex Space is, and lights my fire almost as much as I think it lights yours talking about this asset class. Really appreciate you taking the time to come and spend a half hour with me.
Thanks, Sid. Yes, appreciate it.
I want to give one more quick shout out to our sponsor, Kiwi 2. They've been so gracious in allowing us to bring these stories of the small bay and storage world to you. Reach out to them at kiwisteel.com. The earlier you bring them into a project, the more they can help you understand what your steel costs are going to be and help you avoid a bunch of other mistakes that they've learned over the course of 30 plus years of putting up steel buildings. Wayne Woolsey and his team, simply the best crews in steel. He's Hamza Ali, CEO and founder of Hamza Invests, going to be leading Flex Connect here at the end of September. Really glad to have him this week. That's it for this week's episode of Stories Behind the Door podcast. We'll be back next week.